everybody to the 23rd edition of LM's Weekly Wrap, our weekly program to cover all the developments that have happened in the international markets, the domestic markets, and their implications on the various stocks. With me is Jash. He will be briefing us about all the developments that have happened in the markets, followed by a weekly wrap up of all the sector related developments from my side. It's been a relatively thin trading week. We've seen developments in US markets as well as the Chinese markets, but I think more light will be thrown by Jash. He'll brief us about these developments. So Jash, welcome to the show.
Thank you, sir.
Yeah.
Hello everyone, it's a pleasure to be in front of you all, and I would like to wish you a early happy new year. So basically, as usual, I'm going to take you about the Nifty levels and then go to the global markets and then domestic markets. Last week I had said that 18,000 levels were very important. It had broken it. We saw a dull Monday start, but then it started gaining momentum. There was a relief rally. Today, the markets have been at 18,400, 300 levels, which I think is a very good good start to the week, and maybe it had not broken the trend line, but we should still remain cautious as we don't know what's going on globally. The Chinese policies are still looming around us, so I think we should still stay cautious and clear of where we are investing. Otherwise, our sectoral themes remain good. Nirav will throw some more light upon that. Coming to the US jobless data, they were slightly higher but still near the historic lows. The Brent crude lost about 2% in trade in the last week because of the slowdown in Chinese demand. Also coming to India, the current account deficit has been at 44% of GDP. It's at it's almost at a 10-year high, and at about $36.4 billion. I think this is something that I'll be worried about, but to counter that, the growth in the Indian economy is still very high and very lucrative. So even if the CAD, the current account deficit, is high, I still feel that the market will take it in very easily, and the growth will still remain as intact. That is what I would say. And for the sectoral outlook, I would like to hand over to Nirav, sir. Thank you.
Yeah, thank you, Jash. So, as pointed out, the global cues have not been very. It's been a mixed picture as far as the global cues are concerned. And this week started off with mixed news flow coming in from China. One, there's been a massive spurt in the cases. China has abandoned its COVID policy, so the mandatory quarantine procedures which were being adopted have been given up, and there's been a spurt in cases. At least that's what being reported in the international media. So the situation continues to be grim over there. That is one factor. From 8th of January, the mandatory quarantine procedures are going to be shared by China. Another important factor to watch out for is the Lunar New Year, that is the Chinese New Year, where all the migrant workers, they go back to their villages in the last week of January, and they will be returning only in the last week of February. This means that the production schedules are likely to get disrupted on account of this, and this has impacted a lot of IT companies in the US. I mean, the stocks of Tesla, Apple, all are under pressure because of the volatility in the production schedules. Now, there is uncertainty on one side relating to the COVID, and secondly, there is the uncertainty because all the migrant workers will be going away. So we will see a clear picture emerge only in the last week of February as to how the things are going to play out. As far as India is concerned, the next 40 days are very crucial for us because we will get an accurate assessment about the COVID picture only in the month of January. That's what the experts are predicting. We'll see whether the cases are increasing or not, or whether we have been relatively unaffected by COVID. So these are all important factors to watch out for. Now coming to the sectoral side of the markets, which is of more interest, I think all the macroeconomic developments are going to play an important part as far as the macro picture is concerned. what is the theme to look forward to in 2023? That's what people have been asking. The first we start off with government has got robust tax revenues, buoyant tax collections by the government, and that has helped, has been channelized by the government in various sectors. Government has been spending quite well in railways, in defense, and we are seeing the railway stocks are literally there on a tear, and there is a multi-year visibility as far as the railway stocks is concerned. The execution is going on quite well, so I think railway stocks led by the likes of Rail Vikas Nigam Limited or IRFC or Railtel Rights, IRCON, Indian Railway Construction, Titagar Wagons. I think the entire list has been sent by us. All these stocks are likely to perform exceptionally well. At the same time, defense stocks are likely to perform well, led by the likes of HAL, Garden Reach Shipbuilders, Cochin Shipyard, Mazgaon Docks, so Midhani. The entire list again has been posted by us. It is available. So defense stocks are likely to benefit on account of the Atmanirbhar theme as well as the exports related theme. The third sector to watch out for is the infrastructure space. The government is spending heavily on infrastructure, and today we've seen record number of announcements from companies, KC International, Kalpataru Power Transmission. A lot of EPC players, they are reporting contracts, winning contracts in the range of 700, 800 crores. Orders have been won by companies, and most of the companies have their order book which is full. Now they can concentrate on the execution part of the projects, and at the same time they can try to better their margins also. So this again is a sector to watch out for. Another sector to watch out for in the next year 2023 is going to be the fertilizer. It's being widely touted that 2023 will be a year of the fertilizer sector because food security is very important. So stocks like National Fertilizers or RCF, GSFC, Coromandel, I think all these stocks are going to be in the limelight. Deepak Fertilizers, they are going to be in the limelight on account of this development. And finally, one sector, sugar. We have raw sugar prices which have touched a 5-year high. So sugar stocks are likely to be in the limelight on account of this development. So as I said, there are a lot of things to look forward to, whether it is railways, whether it is defense, whether it is infrastructure, fertilizers, sugar. These are the themes to watch out for in the next year. Coming to the usual sectors, I think auto continues to be under pressure. We'll be having the monthly auto sales numbers, and we've seen pressure as predicted by us in Maruti, Tata Motors. Secondly, banks are on a roll. We have seen banks move up in trade, led by State Bank of India, ICICI Bank, and we continue to like smaller banks like Federal Bank, Karnataka Bank, City Union Bank, DCB, IDFC First Bank. Capital goods continues to likely to be impacted by the infra spending, positive impact over there. Of course, infrastructure as we have already discussed. And FMCG sector likely to be under pressure because the rural demand has still not revived. Cement is under pressure because there has been news that month on month the prices have been under pressure. So we have seen some setback in the cement. And two sectors which have given negative returns in this year. One is IT. IT index is down about 25%.
Correct.
So I think market participants will like to see the inflection point for the IT sector. At what point the IT sector is turning around. And this is likely to be influenced by the global development because we've seen stocks like Tesla which have corrected 75% from the peak. And Tesla is at 2-year low, Apple is at 1-year low. So I think global cues will play an important role as far as the IT sector is concerned. And pharma is down about 12% this year. So we'll have to see how the turnaround takes place, how the things play out. So broadly, these are some of the themes which are there for the coming year. I think stock-specific movement will be very, very, very paramount, very, very important. We'll be having the numbers result season starting from 12th of January. So commentary from the company is going to be very, very critical, crucial, and that will be decisive as far as the markets are concerned. So I think mid January we will have a more accurate picture about how the things are playing out. We'll have an exact idea about how COVID is playing out. We'll have an exact idea about how the earnings are going to play out and how the geopolitical tensions are going to play out in the overall market. So with this we come to the end of the session. We wish you all very, very happy new year in advance, happy investing, and please write to us with your feedback on our program. And I think we'll have the closing comments from Jash.
Yeah, thank you, sir. I would just like to say, please like, share, subscribe if you like our videos, and download our app InvestMart, and you'll get all the details and calls over there. Thank you.
Thank you very much.